We're the first sign of the economy going one way or the other. We're like a bellwether because people will pull back on buying equipment on any kind of noise, as I call it out there. So I have to manage the portfolio, $184 million portfolio for a $5 billion bank is, it's deeply recognized and deeply watched.
Welcome back to ACS Portfolio Perspective. I'm your host, Andrew Pace, Chief Client Experience Officer at Asset Compliance Solutions, joined today by an industry legend, Donna Iannuzzi, Executive Vice President at First Equipment Finance. Donna brings 28 years of equipment finance expertise to our conversation today. As the 2024 recipient of ELFA's Michael J. Fleming Distinguished Service Award, the industry's highest honor, she has dedicated her career to both building successful portfolios and developing the next generation of industry professionals. During her 25-year tenure at F&B Equipment Finance, Donna built and managed a portfolio approaching $1 billion, earning national recognition with F&B ranking among the top 50 finance companies. Beyond her operational excellence, Donna is a passionate advocate for industry advancement. She serves as trustee and chair of the Academic Outreach Program for the Equipment Leasing and Finance Foundation, sits on the board of Equipment Finance Cares, and was recently honored as Mentor Extraordinaire by Monitor. After retiring from F&B, her commitment to the industry brought her out of retirement to build the Equipment Finance division at First Equipment Finance, where she has grown the portfolio to $185 million in just 4 years. Donna, welcome to the show.
Thank you. Thanks for having me. That was a lot. Going through that, I'm like, where did the 28 years go? Let alone all of that you put in one sentence seems like. But I want to clarify one point. We can't do this all ourselves. Like at FNB, it was a team effort, to get to that $1 billion. So I do attribute it to a strong team, that I worked closely with. So.
Of course, Donna.
Yeah.
We're so glad to have you on. Your story is one of long-term impact, deep leadership, and genuine passion for the industry. And I'm really looking forward to unpacking that with you today. So let's kick things off with how you've led high-performing teams and built lasting culture of mentorship. In today's competitive hiring landscape, what has been the most effective for you in attracting and retaining top talent?
Well, we all say it is culture. So you kind of have to make sure you have your line of business, that the culture is there and analyze what, younger people want, because we need to attract more younger people into our industry. So we have to be in tune to what they're looking for. We have to make sure our divisions are structured that way for them to come along. And it's a hiring process as far as going through in my career at this point. You kind of get a gut for someone. And you kind of get a feeling that, they've got an equipment finance mindset that I think I can mold and work with. So it's really beginning in the hiring process. And obviously compensation is a big one. But it's really, what do you have innovation? What is your company actually doing out in the community to help the community so what you're doing is more beneficial to the community as well, bringing that in. All of that really comes into play to attract young people. That's kind of what they want. They want to make a difference. And the younger people and attracting talent, they own something like it's their own business that you want is they're running their division or the job you have. I tell them that's their own job. That's their own business. And I give them the freedom to do that. I'm not going to micromanage. I have to really analyze and pick the right person with the personality that I feel can take it that way, and I can trust them to be independent. So it's a real analytical process.
For sure. You've mentored so many in our industry, and maybe you just touched on it a little bit at the end there about not micromanaging. But what would you say your philosophy is when it comes to developing emerging leaders?
Well, a lot of times I like to teach them. I'm a shoulder-to-shoulder leadership. I am definitely not someone, I wouldn't tell somebody to do something that I wouldn't do, or I wouldn't get in the trenches with them. And, I say, look, I do it this way, but I'm open to how you see me doing this. I've been in the industry a long time. What's your new perspective on this? I'm open to new ideas, not how I did. I'm very open to, just the day of innovation and the young talent that their minds are really innovative and sharp. And I'm just blown away by what they offer me. I can teach them the fundamentals. I can teach them how to talk to the C-suite. I can teach them all of that because we all have leaders above us, no matter what position you're in. So, I try and coach them in those ways. But I want more from them. I want them to bring out their best. I want to try and bring out the best in them.
Yeah, that's great. And you talked about culture earlier. How does building that culture in a smaller, more entrepreneurial company compare to shaping culture at a larger institution?
Well, and I was thinking about that question, and it's easier because I can get right to the CEO a lot faster than you can get to a leader when you're a much larger bank where there's many layers. So, that's the whole point of creating a culture and coming in and wanting this type of division, like the bank I'm with now. They want an equipment finance division. That's where you set the table and you say, this is the kind of culture I need to track the people in our industry. And are you on board with the type of culture that I need to create? And if not, we're going to have a hard conversation of how we're going to get to that culture. Because it's a highly competitive industry. It's a fast-paced industry. And we need to make decisions, and we need to make the right decisions for our organization. And I really am passionate about them following my direction with some flexibility. But it's easier than to get through the bureaucracy of a much larger bank. There is a smaller bank, but there's also, you have more flexibility and more, you can get right to the leader and sit down and have a conversation. And we're kind of a community bank, so we operate a little bit different. So they're really more about that than a corporate structure. So it was much easier. Although at FMB, it was great because we became part of them at FMB when they were only 6 billion. When I left, they were about 50. So, we kind of had that same type, which this bank is about 5 billion. We had that same kind of thought process in the beginning that carried all the way through because we proved ourselves that, we can do a good job.
Sure. I mean, what do they say? Availability is the best ability, right?
Yeah, exactly.
What lessons did you learn bringing from your team from F&B to First Equipment Finance, and how did that transition influence your leadership style?
Well, it's that comes back to the management that we came from to the management that we're here. Being a smaller organization. So it was almost like I brought them over because they had the industry knowledge. I mean, it is very hard to start somebody from scratch and introduce them to equipment finance if you don't have like a long runway. We came over here and we had business immediately. So we really needed the talent. We really had to have the knowledge brought over here that we did. So that was a huge bonus. The only thing I would say is it's like tearing away, we're a community bank, a smaller bank, so we have a little bit more flexibility. There's no longer, I always said, there's no answer. Run it by me, because where it was no somewhere else, it might not be no here. So I had to kind of like retool them of an organization that we were at before, to a more community type structure. So that's about the only thing. But we collaboratively, we handpicked, people, we collaboratively worked well together. So all that was kind of, by the wayside. So we had that covered.
I mean, and obviously being a smaller community bank, you probably get to know a lot of your customers personally, seeing them, while you're, out and about, right?
Yeah, that's a good point. Actually, being there, we were just at an event, which is Hunter Truck Sales is one of our big vendors, and they had a grand opening, and myself, I haven't, as I've been on the road in a while, but you still see I saw a lot of my customers that haven't seen in a while, and it was just nice and refreshing to get out there and see them, talk to them about their industry, where I don't get out as much. And that's what I love. I'm more of a customer service, in the weeds kind of person with meeting customers. So that was a big bonus to get to see them at different events. And yeah, basically, we know most of our customers very well now, although the portfolio is getting bigger and bigger. So my sales team knows them pretty well. All the salespeople really know their customers.
So let's pivot to portfolio management. Always a hot topic, especially with today's market dynamics. How are you navigating the current economic uncertainty while managing, the portfolio?
Yeah, exactly. That's, I always said I feel like I'm an economist and a futurist. At this point, it's like I'm watching all the gauges. You're watching, this is spiking over here, so you got to run over here and pay attention to that. But you're always watching, making sure the gauges are staying all in line. And it's a constant. The environment is changing so quickly that you have to be very in tuned to the economy and what can change. I mean, we're in transportation, so I'm laser focused on that. I mean, the transportation is pretty much in a recession right now versus anything else. So I'm watching truckloads. I'm watching, how our vendors' sales are going. I'm watching how their orders are going. I'm so laser focused on industry data. Then I'm on like Bloomberg and CNBC watching, okay, how are these tariffs going? How is that going to impact? What countries are we reaching agreements with? So it's really a lot of intense. And equipment finance economy, we're the first sign of the economy going one way or the other. We're like a bellwether, because people will pull back on buying equipment on any kind of noise, as I call it out there. So I have to manage the portfolio. $184 million portfolio for a $5 billion bank is, it's deeply recognized and deeply watched. So that's pretty much, you have to stay laser focused and be on top of every change that's happening in the world and in different sectors.
And you've implemented a 5-day outreach strategy. Can you share with our listeners how that's helped you stay ahead of, the delinquencies that we've seen?
It's almost like instinct. When delinquency, I always say in equipment finance, your growth will take you down if you don't have any, and your delinquency will take you down if your delinquency is too high. If your production's too low and your delinquency is too high, either one of those and both will really take your division down. So we implemented, I want to know, typically a customer that's always paid us well. Okay, now they're going 5 days. Courtesy call, like just, hey, how's it going? Just didn't want you to incur a late fee. Did you not get your invoice? A really soft call. Everything good? That's a chance to ask them, how are they affected by tariffs? How are they being affected by anything going on in the economy? There's so much change, social unrest, everything. And so we get a little conversation. I want to know right away if we have an issue or a problem. And then at that point, we start calling them between at 5 days, and then we start calling 20 days. And then there's deeper conversations. Look, you never went this long. Are you having difficulty? Can we help you sell your unit? We can match you up with maybe one of our customers, that maybe is looking for that piece of equipment that you have. We can connect you. Do you need us to help you sell it at one of the vendors? If your originating vendor might be interested in having it back, if you're at that point, please use us as a helpful resource. We don't want you to incur any difficulty or any repossessions, is it just a pause? Do you need some deferrals? Do you need some breathing room? Talk to us about that. So in equipment finance, you've got to start 5 days, and you have to have a lot of knowledge. It's not calling for dialing for dollars, as I call it. It has to be a more methodical thought process when you're on your delinquent side in equipment finance, especially in the transportation sector, which is we're in. And I've been through. People say, well, you're still lending in transportation. Yeah, my portfolio is strong. You have to know how to lend in transportation. You have to know. I always say, when things start to feel really, really good, there's a downturn. I start to get nervous. It's like, wow, this is all great. We're doing wonderful. No, this is feeling too good. That's where you have to constantly have your eyes open and look forward as to how you feel the economy is going to go, and are you feeling the same rumblings as the last 3 downturns? So,
thank you. And you mentioned tariffs a few times. What other ways have they affected your portfolio, especially in the transportation sector?
Well, right about now, it's been good. We haven't felt anything yet because, as everybody knows, people were buying forward. They were pulling forward there because they were afraid of the tariffs. The equipment's there. It's a regular price. Right now I'm going to buy something. But I've seen this also in my years past that, are they buying too much? Then at one point they're not going to need it. And now it's sitting and they've got a big payment. So you've got to be aware of all that, even that pull forward situation. So, volume was good. I'm starting to feel the middle of July now and going forward, slowing up. I think future buyers bought, as I call it. And I think right now, the tariffs are starting to kick in. The shipping yards, the volume's down 50%. I think it's maybe even a higher number than that. But the shipping, so I'm watching all that. I'm listening to, different, it's earnings time right now. I'm listening to how JB Hunt came out. I'm analyzing a lot of that. So you're hearing the stress cracks for transportation. But even on the construction equipment side, people are moving on to, with tariffs, they're renting. They're pay per use. There's these new situations out there now for people because they don't want to own a piece of equipment for 5 years straight and pay $8,000 a month every month for 5 years because they may not feel that they're going to have the contracts going for the next 5 years. So in our vendor side, rental fleets have become very popular, financing, not floor plans. These are called financing your rental fleets. Because the rental portion, our vendors realize that's a big, it's a moneymaker for them, but it also helps them move equipment because people are reluctant to make that long time purchase right now. And I'm speaking more on like small ticket, like more small business. And, that's what drives the economy. And that's just what drives the country is small business. Mm-hmm. But rentals, pay per use, that's pretty much the tariffs. At the expense that is increasing, they're starting to see some pricing increases on some of these. So that's the last thing anybody needed was a price increase because if you remember back in the pandemic, prices on trucks, equipment, it went almost up 30%. Never really went back. So now we're adding tariffs to that. So now we're up even an exorbitant amount, unreachable for a lot of people. So renting becomes that big option.
Yeah. And you talked about a few early warning signs earlier. What others do you watch closely, and what are some strategies that have helped you mitigate the risk?
Well, we actually look at different sectors to dive into. And when we really come down to it, I like things that have wheels and that we can, move out. So we've really shifted a lot to vocational vehicles, utility trucks, those kind of units that has consistently through the years have performed very well for us. So versus, the long haul, sleeper truck transportation, we're ratcheting that down, quite a bit. But, we're not out of that business, but we're just being pretty selective on that, knowing, what's going on out there. So that's pretty much, we do like I said, the vocational type of construction equipment is still the used construction equipment we will do. And that's, so we're trying to analyze, different equipment sectors, but then again, you got to monitor your credit also. You've got to kind of move up on your review your credit policy and make some adjustments, in this economy. I know, we use PayNet obviously, and they do some adjustments to theirs based on economy, but we have to make sure that things that become a little bit more volatile, that we have to do, our underwriting has to be adjusted a little bit to it.
Great. Thank you. So let's talk about industry evolution and future leadership. With almost 30 years in the industry, you've seen tremendous change. Let's talk about where we've been and where we're going. So what are some of the most significant shifts you've seen in equipment finance over the last 3 decades?
Well, I remember when I started, 24-hour turnaround time was the thing, right? I said now, between AI and automation, there's credit decisioning coming out in minutes. That is the biggest change that I've seen, obviously, through my career. But, the other thing I would say, still relationships, people like to do business with people they know and like. Relationships are still a big part of it, but you have to have the automation also. You've got to have, people still want to know you, know who you are. They want you. The biggest thing, answer the phone. I mean, that's one thing that I tell, our sales team. The biggest complainer of customers is, they want automated portals to make their payments and automated. They want to do a lot of that stuff on their own. But when they need somebody, they want a person to contact. So I tell our sales team, please answer your phone every time. I said, because that will gain you the next deal. That person will remember you, that you called, that you answered the phone. Look, I can speak to somebody. They have the automation, they have all of that. But, that part really has not changed. The other things just enhanced all that for the sales team is the automation. And what I love is that I love AI. I love ChatGPT. I use it. It becomes my personal assistant. I said, it helps me get started on things. And I think everybody should be using that at one point to help them get started. If you're short-staffed or that, items like that, that's things we never had that would take me days to get started on something. But so, and the younger talent, obviously, that's what they grew up with. So I like to surround myself with a lot of the younger talent and, teach me a lot of how your mindset is on these things. I'm going to teach you, this is our business structure. Now layer all that in for me with all your expertise and how you look at how this should be structured. Versus here, I'll give you the parameters, I'll give you what we have to do, but I want your perspective to help me build, the future. Because, a lot of our vendors now, manufacturers, you're buying a piece of equipment online, you're testing it virtually, and you're making a purchase decision based on that. So, a lot of that is the automation. The other thing I see is in small business, I used to do a lot more leasing. The old GE model, which a lot of people came from, that is kind of going away. And we lost leasing when the accounting changed and rates lowered. So when rates were 3-4%, people were saying, I'm just going to take a loan now for that. Depreciation, I can use the depreciation. The lease doesn't make much sense to me on this because of that. Plus, I don't believe at that point, because the rulings changed, the accounting rulings changed, so everybody's on balance sheet, that people didn't really understand it well enough to say, you know what, let's just do that. So there were years and years and years of lost leasing concepts. So, it's more up in the middle market lending. but small business kind of lost that leasing structure. I'd like to see a lot of that come back. And we need good training for that.
Yeah. Do you think it will come back?
Well, I thought it would based on prices increases. I especially thought a TRAC lease would come back at this point. And I'm hearing a little bit of ticked up because, especially during pandemic, I was saying, well, why don't you do a TRAC lease? Your line item is the same from the previous purchase, but you just have that residual, but your payment's going to be the same. You're able to keep your financials the same because of the residual or the TRAC lease at the end. And once, that's great. And then the customer ended up not doing it and just doing a loan. So that a TRAC lease I thought would be the biggest one to kick off. And like for us in small business, it didn't. But I know middle market, a lot of that's going on. The bigger companies, operating leases, I know that is pretty much happening. But the small business side, it's not. I would like to see that take hold. And, I was even talking to some people at ELFA for, some coaching, some training, the younger people, on how to sell the accounting part of it and how to sell the leasing structure. So we're all trying to, think about the way we can do that. So.
Well, that's great. And talk about succession planning. It's such a critical. Why is succession planning such a critical issue for our industry right now?
Well, as you know, we're all aging. Well, not you, but we're all aging in this industry, and we have less years ahead of us than we have behind us. So we do need that to groom that talent and recognize that talent to replace us. And then it's there, but it's just our industry, really nobody knows about it. And that's the issue. And that's where I come in with the academic outreach at ELFA, the Foundation, Equipment Leasing and Finance Foundation. And that's why I came out of retirement, really, is to focus on that, because looking around, when I got in the business way back, and I would go to a lot of the meetings, I could count the women, 5 on my hand out of, on the annual, which was 800 people, maybe 900 people. There was very few of us, and very few of us in leadership roles, if any, at the time at the events. So we've made big strides in that since I started to go to a lot of these events. But now we're aging out. And we need that younger generation. And what better way is to go out there and talk to colleges, students. And I actually placed 3 interns. The internships is huge. When I'm speaking at the colleges, I always talk about internships. And please, if you want an internship, we have, on the website, we have an area where you can see who offers internships in our industry. And the kids are elated. Well, why don't we know about this industry? So it's just we have to get the word out. And the amazing strides we're making, though, is that we have at University of North Texas, there's a course for equipment finance, and it utilizes a CLFP book. And they come out with not a full certification, but it gets you kind of in the industry and we also have Arizona ASU. So we're promoting it. We're making huge strides on that. So it's the succession plan is, it's so important. I mean, we don't want equipment finance to ever go away or roll into something else, because it's amazing. It's fun. It's such a exciting career to have. It's well compensated. Everybody wants to know what. I always start out at the college at the student level. I say, okay, here's my slide here. I'm going right to the compensation slide. Here's where you can make. Here's where you can make in our industry. So now I got your attention. Let's talk about it.
Right.
So,
and those 2 programs that are being offered at North Texas and ASU, those are recent initiatives. Yes. And, before then, there really wasn't any degrees or programs offered at any colleges or universities in the U.S. for equipment finance. So you kind of land in equipment finance, but you end up making a career out of it because, as you mentioned earlier, it's exciting, it's fun, you learn something new every day. There's great people in the industry that want you to thrive. I mean, you see banks building coalitions and collaborating, even though they're competitors. That's exciting news for any listeners that are, looking to get into a career in equipment finance, because now they offer those programs.
Yeah, and also what we're doing too, and obviously in Equipment Finance Cares, we're starting a mentor program also. So we all know it, as we that how important those things are. And so many people are making college presentations, campus to career presentations, and that the word is getting out, but it's like moving the Titanic. We're a few students at a time, and the scholarship program. We invited the students at this point to one of the industry events that ELFA puts on, and the excitement in them. And I specifically sat and talked with them, and I'm going to mentor two of them, and they were just elated. They couldn't talk to enough people. So it's a very exciting, but we just have to keep getting the word out. And Equipment Finance Cares is doing that as well. I think all the ANIFA, I think all the organizations, we all realize the same issue, that we need to our succession plan. And believe me, when we leave this, we want to leave it better than we came into it. So, what better is to choose the right people and train them and nurture them and show them the way, and than doing that. That's what we need to do that.
Yeah, I saw recently a press release, and then on LinkedIn with the CLFP, where you talked about the program with the colleges, where they had their first, maybe not their first, but one of a graduating class that received maybe their junior, their junior certification. That's exciting. I mean, I know back a few years ago when I was at a conference, they just reached 1,100 CLFPs, and I mean, they have to be close to, if not over 1,500 or more by now. So that's great news.
Yeah, well, and it is, and it's a great program, the CLFP, and pretty much you're going to get a job in the industry if you have that. And if that's a great Reed does a really good job at the CLFP organization. And in fact, I mentored a young lady, and that's the other thing, when you mentor someone, there's a point where you have to recognize, this young lady was with me for 9 years. I brought her over here at this organization, and saw so much, extremely smart, decided that she had to get her master's in business because she didn't have a business background. And she loved the industry so much. We went back to college. She got one of the scholarships too. She qualified for a scholarship of the Foundation Equipment Leasing and Finance Foundation scholarship, and brought her knowledge here and learned so much. So I took her as far as I could in my organization, and I had to let her fly. And that's the bittersweet part of it. But we don't do syndication. We don't do a lot of things. And, I could see she needed more. So, I said, maybe time for you to, experience other things. And I don't take it as a point where I want you to leave. But, it's like a mother when you're nurturing somebody, you want them to fly on their own eventually and do great things. So she did move on. We stay close and connected. But that's if I leave the industry, and you meant, at this point, that's what I'll look back on and say, who did I help? Who did I help grow in this industry? Who can, that made a big difference. If I can make a big difference in somebody's life, then that's the success of my career.
Oh, 100%. And, you talked about AI earlier with making quicker credit decisions than than when you first started in the industry. What are some other ways that you're approaching integration of AI while trying to preserve that, relationship driven core of your business?
Well, there is so much that you can do with AI and not change. Just it would be better. It would be better for the customer experience. And I can scale volume then. It's not like we're going to let people go, but just the automatic portals to make somebody come in to make your payments, less phone calls into our office until we can take the phone calls that are meaningful and not miss those. And between operational, there's so much AI automation pulling of credit, and processing. You put an application in and there the AI is pulling all the items we need to make a credit decision and automatically sending it over to an underwriter. That helps us look at the next application, and that helps us move upscale versus adding people, but then giving other people within our organization, more granular, more meaningful type of jobs within our organization. AI is so amazing. We can reach our customers both digitally and personally. So many different ways we could touch our customers in many uninvasive ways, but still get the message out there. But AI is here to stay, and it's just going to make our industry operationally, even in the sales side, for the sales team. You have a quick question that, the sales, they have iPads, they have the answer right there, or, sign something, DocuSign. I mean, we were doing DocuSign forever. We were doing DocuSign, way back when I was at FMB. We were probably one of the earliest, but we pushed really hard. Our insurance division at that point was doing it. And we said, hey, if they can do it, we can do it here. So we pushed pretty hard. We were a little bit of a rebel on that. And DocuSign had just exploded. I think we're at 70% of our eDocs sign. So yeah, it's here to stay. And we only scratched the surface. We really did on what AI can do.
Right. So let's talk about building industry legacy through service. So to close, I want to focus on something that really stands out, your ongoing service to the industry. After retiring, what inspired you to get back in the ring?
Well, it was just that, I was 61 at the time, and it's things change, where you were once an organization gets much larger, you kind of lose the personal touch, and I was more of that. And at that point, so I realized you realize when it's time, for you to move on, and your core, how your core is. So it's time to move on. But I still wasn't done to a point I could have been. I had 3 months to think about it. As far as 3 months, I had to give the organization 3 months of my time as the retirement time. And then started to reflect. I'm very heavily in ELFA. I wanted to stay in ELFA. You have to be in the industry to be in ELFA. Equipment Finance Cares was coming along. I'm seeing all these organizations that are truly caring about our industry. And I said, I got more time, so I can move to a smaller bank, have more time to spend on developing people, supporting some of these organizations, giving what I know, learn from them to even be better to help, younger people grow in this industry. And because I love it so much, and I found it at age 36. That was way too late. I wish I was found it in my 20s. So that kind of always stuck in my head. I want somebody to find it a lot earlier than I did, because it's such a fulfilling, and we meet so many people that we build strong relationships. We're competitors, but we're friendly competitors. Nobody is. It's not. We'll reach out to each other, for it, and have dinner together with each other. It's just a welcoming organization. Like you meet excellent people, and there's that more people need. If I could help make a difference, and ELFA was doing that, and I was just kind of making. I became part of the academic outreach in 2019. So I left FMB at 2021. So I still had more of my trustee to go yet. So that basically wore on me. Let's put it that way, But my husband said, "Yay, he's retired. Yay, 61, you're going to retire, and I'm like, well, not so much." No, it really is. It's truly the love of the business and the passion to help others. It really was.
That's great. And looking ahead, what's your vision for the future of equipment finance, and what role do you see yourself continuing to play?
Well, I continue, to build this division. I'm looking at right now we have the vendor side. So, the next progression when I modeled this out, the beginning would be the next layer was building the commercial division of the bank and equipment finance. So that's my next, endeavor, and to start structuring that out, and we're in the process of doing something like that. So that's pretty much my focus. What I'd like to do, we have the vendor side growing. And I'm managing the size of the bank for $5 billion. So how much do we need on the vendor side? How much do we need on this new endeavor of the commercial side? So I've got I'm kind of excited about that because I did work it through at the other organization, and that's you pull the playbook out and you say, okay, what did I do there to help that get moving along? And some little tweaks, but that's what my next exciting part of it is. And if that when it comes to that retirement, whenever that is, I will stay in the industry of somewhere volunteer. And if I could coach anybody, consulting wouldn't be probably. I like more volunteering type scenarios. So that's my next steps, I guess. If you.
Well, I mean, I've only known you for just over almost a year now. Well, we've worked together back in the days when you were with F&B. But I've known you much closer over the last year, collaborating with your team at First Equipment. But I can just say in our short time, I've certainly learned a lot from you, and I'm a better person, and I'm able to do more for clients just from the short amount of time that I've been with you. So you've certainly been a great mentor to me over the past year, and I've enjoyed all of our conversations and our interactions. So thank you for that.
Yeah, absolutely. The one thing I would say, I mean, I had 20, almost 25 years, 1 month short of 25 years at FMB, and FMB is a great bank, and I had such an amazing career. And you'll always feel like you're part of an organization that you kind of grew up in. So I was very fortunate to have two, jobs. Well, actually, I started out as an editor for TV Guide magazine. So I wasn't even in this industry. I did that 16 years for them, and then got in this industry. So I was very fortunate to have, 3 careers that were absolutely amazing. And I don't know if too many people could say that. So everybody's got to come along to equipment finance to have the same experience I did.
Absolutely. Donna, this was awesome. Seriously, I could have gone another hour with you. These stories, the perspective, the impact. It's no wonder you've earned the respect you have across the industry. We've got to do this again sometime. Thank you for sharing not only your incredible journey, but also your wisdom, candor, and commitment to shaping the next generation of leaders in equipment finance. Your impact on this industry is undeniable, and it's been an honor having you on. To our listeners, thanks for tuning in to ACS Portfolio Perspective. If you've enjoyed today's episode, be sure to subscribe and stay connected as we continue to bring you candid conversations with leaders shaping the future of equipment finance. We'll be back soon with more conversations from across the asset-based lending and recovery world. Until next time, take care.